Good morning, and welcome to episode 148 of Getting Rich. I'm your host, Rich Checkan, president of Asset Strategies International, and today is Wednesday, November 15th, 2023. I'm greeting you here today from beautiful South Beach in Miami, Florida. Down here for Joel Nagel's 27th President's Week annual conference. Fantastic speakers, Tulsi Gabbard, Porter Stansberry, Buck Sexton, and a whole laundry list of people. Today's the last day. I'll be flying back home tomorrow. As I mentioned last week, doing a little bit of a change of pace here. Last week talked about the most often asked question in 2022, which was, why isn't gold doing its job? And the answer was, it absolutely was doing its job. This year, the number one asked question, as you can imagine, is, why isn't gold doing its job? I get that a lot at these different conferences, you can imagine. But when we get done, I hope you'll have a better understanding for what gold does for you and for your portfolio. So let's get right to it. We started off this year with gold on pretty much a high from last year. It had surged in the last quarter of 2022. And so far this year, gold is up a little bit. We've seen low points, and we've seen now moving up toward the higher points. It's about 8.4% up for the year. Silver's lagging, down about 3.5%, basically unchanged for this year in 2023. The Dow is down 0.4%, 0.4%. The S&P 500 is up 10.58% roughly, and NASDAQ is up 25.31%. And amidst all of this, the US dollar started out the year at 105 on the index. It dipped down to 100. It shot back up to 106, almost 107, and it's back here at the middle of the fourth quarter at 105, exactly where it started the year. And everybody's wondering, why isn't gold moving a little quicker? We've got all sorts of issues going on. And basically what gold has done this year, it's reacted to the marketplace and the market news. So in the first quarter, if you recall, everybody was scared to death that all the banks were going to fail. And in fact, some did. Some of the biggest bank failures in U.S. history occurred in the first quarter, and everybody ran to gold as a result. They were worried, as rightly they should be, and I don't think that worry should be done as of yet as far as the banks go, but more on that in the future. Second quarter, everybody felt, the banking crisis is over. It's all better. Ding dong, the witch is dead. And, we'll go ahead and go back into risk assets. The heck with gold. I don't need it. And gold fell a bit in the second quarter. And then in the third quarter, we saw, tensions heat up, and in the fourth quarter, we had a big event when Hamas attacked Israel, and that's been going on for the past several weeks. That caused a flight of safe haven flows to gold once again, and gold is now hitting those all-time highs for the year around $2,000. So the bottom line is gold is really kind of doing its job, holding steady and reacting to what the market gives it. People want to flow to gold when safety is in order, and a lot of times when you see movement of prices for gold higher in crises, what you got to understand is they tend to be short-lived. Okay, when things seem to be under control, kind of like what we saw with the banking crisis earlier this year. I also saw it when the planes hit the World Trade Center towers back on 9/11. Right away, gold shot up. It was up $50 to $100 in a day. Spent most of the day telling people, don't jump in here, don't chase these higher prices. And within a week or two, prices reverted back to where they were before the planes hit. And we tend to see that over and over again historically when we're dealing with crises. So I expect gold to benefit in the short term. Longer term, monetary policy has a much, much bigger impact on the gold price. It's how we're mismanaging our dollar that has a much bigger impact on the gold price going forward. And that's what I would stay focused on. That's what I would keep laser focused on, is what is the Fed doing to minimize the damage that is being caused by the overspending of Congress. And we all know that the Fed's at the end of their rope. They are going to pause here indefinitely. Once they they might add once, maybe twice more, but they can't do much more than that because they cannot service the debt. And then we'll see interest rates start to go back down, and that's when gold will have its heyday. Keep in mind that in 2023, we saw interest rates go sky high last year and into this. We saw treasury yields, right, go from 0.11% yield to 5% yields in 1 year. That is an unbelievable headwind for the gold prices, and yet gold is up through 10 months or so on the year. That is an incredible yeoman's work for gold this year. So if you think it's not doing its job, you are flat out dead wrong. You are misinformed. If you ever doubt that gold is doing its job, all you have to do is zoom out. When in doubt, zoom out. I want you to take a look at that 100-year track record of gold, 110 years now since the Fed was created. See what gold has done in the dollar terms over 100 years. And in the short term, we'll have ups and downs. In the long term, there is no question. It is a steep slope up in favor of gold. If you don't have it in your portfolio, you are making a mistake. Buy the dips. Take advantage for the long term. Build that security and safety for your family. Next week, I'll be back home, back to normal. We'll get back to prices and normal market movements. And in the meantime, go ahead and like us, subscribe to us on our YouTube channel, send us your comments and questions, follow us on our social media channels, follow us on our twice weekly ASI Always Something Interesting alerts, follow us on our once monthly information line newsletters. But don't ever forget that getting rich starts with keeping what's yours.